Welcome to The Explainer. Today, we are digging into a really big move by India. They're aiming to become a global hub for financial services, and it all revolves around a place called GIFT City and a brand new set of rules called the BATF Regulations. So what is the big idea here? Well, India is setting up its Gujarat International Finance Tech City, everyone just calls it GIFT City, to go head-to-head with the world's top financial centers. This is a super ambitious plan to bring a massive slice of the global financial services pie right back to Indian shores. And how are they going to pull this off? Well, that's where this new regulatory framework comes in. It officially kicked off on June 6, 2024, and it's designed to make it way easier and much more attractive for certain financial businesses to set up shop. You could say this framework is the key that's meant to unlock GIFT City's massive potential. Okay, so before we get into the nuts and bolts of all the rules, it's really important to understand the why behind all this. This isn't just some new administrative policy. It's a major strategic move, one that's aimed at creating a fundamental economic shift for India. And the government's goal here is crystal clear. They want to onshore all that business that's currently happening in other countries, making GIFT City the main gateway for international finance flowing in and out of India. The vision is to build this powerful, self-contained hub that doesn't just process transactions, but also creates a ton of high-quality jobs. And here is the headline grabber, the big incentive that gets everyone's attention: a 100% income tax exemption for 10 straight years. And get this, businesses can actually choose which 10 years they want to claim this break within a 15-year window. That gives them some incredible flexibility. All right, let's pivot to the framework itself. This is the engine that's supposed to drive this whole project. So what in the world do these letters, BATF, actually stand for? Simply put, that is the rulebook for 4 key service areas that India really wants to attract to its International Financial Services Center. Each of those letters represents a pillar of the professional services that, really form the backbone of any global financial ecosystem. First up, we've got B for bookkeeping. This covers the absolute fundamentals, the careful recording and classifying of every financial transaction. It includes things like payroll ledgers. But, and this is an important distinction, the rules are very specific that this does not include actually running the payroll or providing tax services. Those are covered under the other letters. Next is A for accounting. This is a step up. We're talking about compiling balance sheets, income statements, analyzing all that financial data, and even providing valuation support. The key thing to remember here is where they draw the line. It stops just short of formal, signed-off auditing services. Then we have T for taxation. And this part is broad. It covers pretty much the whole shebang, giving tax advice, strategic planning, and of course, the actual preparation and filing for all kinds of taxes, duties, and levies. This is really a comprehensive offering aimed at international clients who are navigating some pretty complex tax situations. And finally, F is for financial crime compliance. This is a huge one. It focuses on the critical work of anti-money laundering and countering the financing of terrorism. It's all about sticking to the global standards set by the Financial Action Task Force, or FAFT. This is basically India signaling to the world, hey, we're a serious, clean, and transparent place to do business. So, if you're running a business that provides these kinds of services, you're probably wondering, how do I get in on this? Well, the authorities have laid out a really clear path for getting registered in GIFT City. It's basically a 4-step journey. You start off by outlining your whole vision in a business plan. Then you submit your formal applications to the main authorities. Once you get an in-principle approval, which is kind of like a green light to proceed, you can go ahead and secure your final certificate of registration. Now, there are some pretty important guardrails on who can participate. You have to be a formal entity, like a company or an LLP. All of your clients have to be non-residents. And maybe most importantly, to protect the integrity of this whole project, neither your business nor your clients can have any links to jurisdictions that are on that FATF high-risk list. Okay, now we get to what might be the most important part of these regulations, the safeguards. This is where India is sending a very clear signal. They want fresh, real, substantive business, not just companies moving their operations around to play the system for a tax break. And what's really fascinating here is the hard line they draw. The rules explicitly forbid you from setting up shop by just splitting, reorganizing, or transferring your existing Indian business. They're looking for genuinely new business, not just old business in a new wrapper. And to give that rule some real teeth, They've put a specific number on it. The number of employees you can transfer from a related company in India can't be more than 20% of your total team in GIFT City. This basically forces the creation of new jobs. And when it comes to assets, well, the rule is even simpler. 0. Absolutely no transfer of existing assets from any of your related companies in India. This is another really powerful tool to prevent shell games and make sure that new, real operations are being built from the ground up. All right, let's get practical. What do you actually need to have on the ground to operate in GIFT City? Who do you need to hire? And, of course, what are the costs involved? Well, first off, you have to have a real physical presence. That means a minimum office size for each employee, plus key qualified officers right there on site. The principal officer needs at least 5 years of experience, and the compliance officer needs 3. And to really cement its international status, everything you do has to be in a foreign currency, and all your reports to the authorities have to be in US dollars. The cost structure itself is pretty straightforward. There's a one-time application fee of $1,000 and a registration fee of $5,000 for each activity you're offering. So if you're doing both accounting and taxation, you'd pay those fees for each. And after that, there's just a recurring annual fee. And that annual fee is tiered, so it scales with the size of your operation. It starts at $5,000 per activity for smaller firms with under 500 employees, and it goes up to $10,000 for the big players with over 1,000 people. It basically links the cost to the scale of your business. So when you take a step back and look at all of it, the big incentives, the specific definitions, and those really crucial safeguards, it all circles back to this one single ambitious vision from the authorities: to build a global offshore center and, in doing so, create a massive number of jobs for India's workforce. With this whole framework now in place, the real question isn't just about following the rules. It's about whether this carefully designed structure, with all its powerful incentives and very strict safeguards, truly marks the turning point for India on the world's financial stage.